Alrighty, good morning, everybody. My name is Eli. I'm here with Genzio, and today we are going to be talking about from royalty streams to token streams, reinventing how mining gets financed. So today we've got a nice panel here. We've got Ben Evledge from Metals. We've got Jonathan Monroe from Crypto Savings Expert, and then we've got Kieran as well from Strata. So why don't we give you guys a second to kind of introduce yourselves, tell us a little bit about your project, what you're working on, where you're at in the space right now, and we can kind of go from there. So why don't I pass it over to you, Ben, first. You can kind of kick us off.
Sure. Well, thanks for hosting us, and thanks for hosting me as well. Great to be on another Genzio stream. Ben Elvidge, I lead all our efforts on Metals.io, which was launched almost 3 weeks ago at TesDev, which is in parallel with ECC, which is a single unified place to buy different tokenized metals. So we launched with uranium, gold, and a basket of rare earth metals. We've got 4 others coming before the end of the year. And as I mentioned, we launched on the EVM compatible rollup on Tezos, and the forerunner to Metals.io was Uranium.io. So that's really where we cut our teeth in the tokenization experience and learned a lot from that, and wanted to extend that to other metals. And so, really excited about what that means for the industry at large, but also for broadening access to people to what is a really critical and interesting asset class.
Yeah. I think one of the big narratives, obviously, in the space right now is RWAs, and so I think this is kind of going to be something that we're going to hear more and more about throughout the year as it kind of progresses. So why don't I toss it over to you, Kieran? Why don't you tell us a little bit about what you're doing over there at Strata?
Yeah, so we do tokenized precious metals with DeFi. So we make it very easy to purchase, trade, tokenized gold and silver. Maybe I'll follow up, but we are certainly interested in other metals too. And in particular, make it easy to borrow against those assets. So we've had users who maybe weren't early into crypto, but had existing precious metals holdings, do pretty large trades when they've been extended credit against those tokenized metals, and reap fairly large profits. I've been in crypto for quite a long time, and even have some on the enterprise side, some experience with physical mining, mineral rights, all that sort of thing. So we can get into that too as we go here.
Absolutely. Cool. And then I'll pass it over to you, Jonathan. Why don't you tell us a little bit about what you're working on as well? Get into it.
Yeah, so we at Crypto Saving Expert, with one of the UK's largest crypto news and education channels. Essentially, our ethos is trying to democratize entrance to understanding about crypto and really helping people go into that realm. But ultimately, on the other side of it, we also like to help promote some projects in the space which are really trying to move crypto forwards and bring about change, particularly in what is quite archaic financial systems.
Yeah, absolutely. Kind of like, I think mining finance is like kind of having this like transformation. We're shifting from like traditional royalty agreements toward more blockchain tokenized funding models, and like gold still kind of remains the anchor of global value, I think. And it's now kind of entering like digital circulation, which is massive, right? Like, so one of the questions I have then is like, how does technology kind of help make precious metals more accessible today than ever? Like, what is this kind of idea of like tokenized precious metals really even mean? If I'm somebody that doesn't know about this, how would you kind of explain that? Why don't I toss it over to Ben, if you want to give us your perspective?
Yeah, sure. I think accessibility is a broad word, but it's probably better to sort of walk through an example with gold and sort of show you the comparison as I see it. So if you want to own gold, traditionally you had a few options. You could buy coins or bars from a dealer, but you'd probably have to pay a decent premium above the gold price for that. Then you need somewhere to store it, and selling it quickly also meant that you're accepting the price at a discount. You could also buy, if you didn't want to do that, a gold ETF, which is super convenient, but you don't actually then own any of the gold, right? You own shares in a fund that owns gold. And you can't redeem them for physical metal. Or you could, if you're confident enough, you could open a futures account, and if you've got the knowledge to do that, and it's got margin requirements, and really is designed for traders, not investors. And so the difference with tokenized gold, and there are various tokens out there, right, is when you do that, you basically hold a digital certificate of ownership over real physical metal that's sat in a vault. And certainly when you buy gold on metals.io through the VNX gold token, there's actually actual gold that's allocated to you that's in insured and audited storage. And so that token is your proof of ownership. You can hold it, sell it if you want, redeem it for the physical metal itself. On metals.io, we already support it with uranium, but we will be supporting with gold as well, using that as collateral. Sounds like Kieran and team are doing that as well. And so I think that gives another level of utility that you don't get if you're operating in traditional markets and with the traditional options that have been there before. That also means you can break down some of those barriers. So you can buy tiny fractions of an ounce, not just whole bars. You've got easier transferability, and you get better transparency on the pricing as well, right? So you can see what that price looks like in real time. So it's really simplified the whole process. And certainly in the case of the metals, we've got metals.io and lots of other projects. We're moving to a world where that's actually physical ownership of the physical rather than some derivative or representation on chain of those assets.
Yeah, for sure. Kieran, is that like over at Strato, is that kind of similar, when you kind of buy some of these precious metals with you, is you actually kind of getting a certificate in the same way that you are with metals, or, what does that look like with you guys?
Yeah, much the same. Although, so I wouldn't know how to handle the uranium just yet. Yeah, so you can make physical. So say you have some, mattress gold, if you will, and you might want to have a portion of it that you digitize but retain direct ownership over. You can drop that off at a partner vault of ours, and similarly, it's allocated and insured and so on. And more or less, if you put 100 ounces in, you get 100 tokens back, right? They're meant to represent a direct redeemable ownership stake. And from there, easy to transfer, easy to swap, easy to get credit against, and so on. So yeah, I think I'm in total agreement with what was said previously. But yeah, to Ben's point, the accessibility is much better. Just the small fractions. It would be very rare also to settle a transaction with precious physically. You can do it, but it's usually at very large quantities. If you're high net worth, you might have a bullion bank that'll lend against it, or you might one day make payments, but it's very rare. But with tokenized, you might be better off holding, but if you have to, it's super easy to transfer in small fractions. So solving that inconvenience of moving the physical, but also the denomination problem that you have with the physical.
Yeah, absolutely. And I mean, I think like you kind of mentioned, I know this with, uranium as well. It's like, if before kind of these things existed, if I wanted to get access into these markets, typically I needed a lot of capital. There's a lot of things like hoops that I kind of had to jump through to kind of get myself involved. And now I really can be anybody, right? Like, I mean, I can be in any part of the world and I can kind of get access to these things. And kind of like what you said, Kieran, too, like, getting exposure like isn't very straightforward. Like you can, before you could like buy stocks or like in ETFs, and they had like these really, really big deals. And now it's like I myself, like this kind of normal guy in like the northern US, can like go and buy uranium and like go and buy gold and things like that. Now, one question I had, both of you said it sounds like you can just go kind of get these, like, so if I buy gold like through these applications, I could theoretically go and pick it up in person Is that about right?
Yeah, it's absolutely right. Get a range for it, give a heads up and all that sort of thing, but it's a direct ownership interest.
In the case of on metals.io, there are minimums, so you need to be holding every VNX gold token's a gram of gold, so you need to get to a kilo to be able to take physical delivery. But yeah, you can absolutely do that directly through the VNX platform. You connect your wallet and you tell them you want to redeem physically, and they ask you where you want to send it to.
Wow, that's kind of incredible, actually. Have you seen people coming in like to kind of claim gold in person, or you know what I mean?
Not yet on our side, but again, we're just shy of 3 weeks from launch with VNX. We've not seen really.
People largely drop off and don't pick up. It's quite rare that someone actually wants to take it out. Everything is more convenient once it's in the vault. You'd have to have some reason to take it out.
Yeah. I mean, I guess why would someone come and like give me some of this gold? I need to melt it down. I can maybe make exactly. If they want to make something, right? John, what did you wanna? Do you want to add anything over to Crypto Savings Expert? If you kind of wanted to add anything on for us. I think you might be.
I think just building on what Ben and Kieran said. I think it's that democratization, because ultimately, previously we've seen that you have to buy huge amounts, and ultimately, as a retail investor, it can be quite difficult to get access to that physical gold. And I think the more that it's able to have that tokenization, the more it democratizes access to it, and ultimately, the ethos of crypto, and ultimately the reason we at Crypto Saving Expert got into this space is just that ability for the average person to be able to get exposure to these things that typically were walled out.
Yeah. And I guess it's so for the user, right? Like the user that uses the application, it all feels very, very, very seamless and very simple. But I was talking to you, Ben, kind of before we got started. Like there's a lot of work that goes into something like this on the back end, to make this kind of happen. I mean, what does that look like for these types of things compared to maybe even, I guess it's probably similar, compared to like the real assets in person if you wanted to buy them, or is it a different kind of process for compliance and, things like that?
Yeah, look, I think it's much simpler, right? And that's the big advantage is that, if you wanted to, we talked about the gold example, but if you wanted to buy gold, you're going to pay a premium above the spot price for that. You'll then need secure storage, which also adds ongoing costs. And then when you want to sell, you're going to get below spot because the dealer is going to want a spread. And so you're essentially working on that toll road. I think what we've been able to do and what our partners have done with gold in that example is abstract all of that away, and you're just buying and selling, and then you've got the costs if you want to take physical delivery or you want to mint directly. But then takes it to a whole other level if you got something like uranium, right? So if you wanted to buy uranium in the traditional market, you probably couldn't in terms of the physical. There's no retail pathway to physical uranium. The only comparable product is a closed-ended investment trust called Sprott, but that trades on exchange in Canada, and it kind of has a lot more volatility in trades at premiums and discounts to the actual asset value. So you're not getting the direct commodity exposure. Same for other critical metals. The situation's similar, or in many cases worse in terms of access. And so in summary, kind of what we've really done is, and what tokenization enables, is you to sort of take away all of that operational hurdle, abstract all of that away, to use a more jargony phrase, and just mean that all you need is a wallet. And in some cases, you may need to KYC depending on the assets. For what we've been able to do on uranium and with metals.io, the upfront KYC is not a requirement. We do wallet screening and analytics on the back end when you've made a transaction. And then if something's flagged, then we do kind of ask for KYC. But, we've got circa 9,000 holders of uranium since we launched in December 24. We've done 7 instances of KYC. And that kind of streamlined, seamless process just means, again, it's another removal of a barrier that stops people from actually participating in what are becoming even more so critical markets for people to be able to invest in. And also they're great from a portfolio diversification perspective as well, right?
Yeah. And Kieran, like, what does that look like for Stratos? It sounds like with metals, obviously I know metals is based in the UK. It sounds like, these things are traded through a Canadian exchange. Like, are you guys kind of having to navigate a similar thing, like in different jurisdictions to kind of make this all happen, or you know what I mean?
To a certain extent. So we certainly lean on licensed partners who are, bullion dealers. And so, in effect, they're the ones effectuating the transaction, doing the vaulting, holding the insurance, et cetera. So we have a couple relationships there. But beyond that, we try to make it feel as crypto as possible. So to Ben's point, where you don't have to KYC, we try not to. For obviously, you got to check if someone's making a physical drop off or pickup, that they say who they that they are who they say they are, and so on. But we want the experience. I mean, it was a bearer asset before, right? Before you dropped it in the vault, you want it to feel as much like that as possible on the back end.
Okay. And in one question, actually, this question for you, Ben, I'm curious. So it seems like kind of gold is where a lot of people start with, like, tokenized RWAs. But you guys over at Metal started with uranium. What was the reason for that?
Yeah, I think a few different things in that, when we launched uranium, I mean, gold is the well-established RWA, right? In terms of, if you think about commodities, and there are a number of different gold tokens out there. But if you exclude tokenized money market funds from the RWA and stable coins, a whole different discussion on whether stable coins are RWAs or not. Then actually the biggest sort of true hard asset in terms of TVL is gold, right? So when we launched metals.io, gold is table stakes. When people think about investing in metals, they think about gold and silver potentially. So we wanted to make sure we had gold. But the real thesis behind uranium and why we started there was, one, if we can prove doing it with uranium, it's much easier to do it with any other asset after uranium, right? From a regulatory complexity perspective. Two, it's a market that's fascinating in terms of the demand and supply deficits and dynamics, and the demand tailwinds that are behind it. So we think it's a very interesting asset from an economic fundamentals perspective that people should be interested in. People do want to invest in that other product, the Sprott product, and a similar product listed in London. Between them have about $10 billion of assets. So there's a market there that we think is in suboptimal products. And thirdly, to the point of, we're incubated within the Tezos ecosystem. We do want to support and engage the kind of Web3 and crypto native audience. And trying to do that with something like uranium is far easier and far more engaging than trying to talk to people about tokenized money market funds. So for all of those reasons, like the demand side, the fundamental side, and just the general interest, we thought it made a lot of sense to start with uranium. And then frankly, once we'd proven it can work with uranium, metals.io was a logical extension, because it's much easier to do it with a lot of the other metals that we've got coming down the pipe for metals.io.
Yeah. I suppose if you start with the hardest, one of the hardest things first, everything after that is kind of like, it's kind of a cakewalk a little bit.
Not quite cakewalk, but yeah, pretty easy.
Well, not yet.
Significantly easier,
right? Easier. Yeah. So, I mean, that makes sense. And I do think, like, this kind of idea of like climate change is becoming more like of a global kind of on the global like kind of like mind. And so like I think like nuclear energy is becoming like a more prominent narrative as well. Kieran, over at Stratos, you have gold. You have silver too. Silver as well. Are you guys thinking of expanding to other kinds of metals, or what other things are you looking to expand to?
Yeah, I would say it's demand driven, and I'm just going back to Ben's previous point. We've done a variety of assets coming out of. So in our corporate history, we were more of an enterprise player for a while, more of a SaaS company, and we actually learned a lot about like, agricultural products, core samples in mining, the very like intricacies of the back end of the big physical producers. And so this kind of led us in like an NFT direction to some degree. These were all interesting, unique things. So we've tokenized in our history everything from carbon offsets, whiskey barrels is another kind of exotic one, et cetera. And kind of what I found was that the demand just clustered with popular, very liquid products to date. So like we did didn't it was a little bit of too much of a storage headache. Like we lined up a bunch of demand for nickel tokenization, for instance. And it's just a little bit difficult to do. So many people just already have gold and silver that especially for kind of the more financial those who are looking at it as a savings vehicle and are not like looking per se for general commodities exposure. That's what you find the most of out there. And so definitely interested. It also, I think, we'll probably continue to see some amount of inflation. In that sort of context, you see most commodities do well. But it's sort of where we find holders has been sort of the driver for gold and silver in particular. And they're just the most market cap there. And they're kind of convenient to store, relatively speaking. Although some of the other precious metals too, you get even more kind of dollars per storage space, if you will, and that tends to work well as compared to like uranium, very complicated, I'm sure, in the back end. And so I think when you're talking to crypto natives in particular, they kind of do want exotic. They want, at least they used to. It's like stable coin hour, and we have a stable coin. There's nothing wrong with stable coins, but there was a time where they wanted really weird new things, and now I think it's like, give me the yield, don't lose my money. So if you're thinking about normies, there's an overlap between the gold bug personality and the crypto personality. They tend to be at least somewhat into the idea, and there's just a lot of gold and silver out there. So it's and we can add something to it immediately when they deposit.
Yeah. I mean, so it lends itself well to the people that are already within the space itself. Jonathan, I had a question for you, and that's one thing I was kind of thinking, Kieran, when you said, I think that like, a lot nowadays, like the narrative is kind of shifting where, people are becoming a little bit more risk averse in crypto. We don't just have all these like degens like gambling on meme coins. That's kind of not like the prominent narrative that I think is kind of coming about, now in 2026. Jonathan, like, you're somebody that works in media as well. Like, where do you see the narrative from 2025 compared to 2026? How has that kind of changed, and what does that look like?
I think the overall landscape has changed somewhat. Ultimately, we are now in a cycle of institutional capital that, whether we like it or not, as crypto native people, that is what we're in. And I think ultimately we are moving towards a system of yield rather than pure price appreciation, because if you look at the way that traditional finance works with their risk parameters, etc., is the volatility that is typically exhibited in crypto is far too high for any framework of a major financial institution. And there's so many opportunities now to get yield in crypto, even on things like Bitcoin. You can sell option strategies on Bitcoin, or you can sell option strategies on various Bitcoin derivatives. And ultimately that now provides an element of yield. And Bitcoin has now moved towards, in some aspects, a yield bearing asset. And when you look at the types of things that pension funds and insurance companies they like things that are stable and they produce a yield. And I think ultimately, if you want to appeal to that pool of capital, you need to reduce elements of volatility and ultimately be able to offer some yield. And I think we're also seeing that in not so much the pure retail element, because I think we do still have that degen element and that gambling sort of subculture, but there is more of a narrative coming through in terms of there is ways to make money in crypto without striking it lucky on a meme coin or trading charts, which there is so much opportunity in DeFi pools and yield bearing assets, etc. in crypto. And yield is ultimately the key focus. We see that in the Clarity Act, we see that in the Genius Act. Most of the sticking points come on to yield. Ultimately, that's where the banks are putting their element in the sand, their line in the sand. It's yield, and I think we've been moving that way for a while now, and I expect that to probably continue because, like I said before, a major institution, if you're looking at a big bank that's trying to get into crypto, 10-20% swings in weeks is far too big for any compliance desk to really sit on. And we're seeing that come through, and ultimately there's a changing of the guard, and it's been happening for a while, and I think we're now starting to see some of the remnants of that come to the surface.
Yeah. I think that's one thing you're talking about, institutional adoption. And I think I was at Denver, I was talking to a couple of people about this. And I mean, even some things like, just like, for instance, in crypto, like we kind of have these like idea of variable gas fees. I mean, and even like something like that is like, like you're not like institutions want like, very like predictable costs and things like that. So it's like, I think now though we're starting to see that kind of change. Where like with Etherlink, they're kind of building out their kind of platform, and you can kind of like normalize like what some of these like costs will actually look like. But I do want to talk about yield now, because I do think like obviously the one thing we've touched on is like, oh yeah, with RWAs, like we kind of expand access to the rest of the world, and it's a lot easier for people to buy these things and actually like hold them. But I think that is a really important part. Like people want to be able to make money on their money and do it consistently, right? Like we're trying to kind of like we're trying to hedge against inflation at least a little bit, right? I mean, and so Kieran, what does that look like on Strado? What does yield like look like for you guys?
Yeah, so we have support for a number of third-party yielding stables, so like Syrup USDC, SUSDS from Sky, and so on. And so, it's fairly easy to get into these things on our system. Obviously, we don't issue them, etc. You can loop them too. So our native stable is currently at an interest rate that allows you to say buy one of these things, borrow against it, buy, and so on. So sort of, at least moderately high risk strategy, but for folks who are looking to amplify yield, that's possible. We also support LSTs, so like Lido's WST ETH, Rocket ETH, some of the Ether5 LSTs, and so on. So there are lots of native yield sources that other people have created. And we basically also, in the same way we do against gold and silver, extend credit against them by minting our stablecoin so that you can magnify your exposure should you like to do so. There are other sort of DeFi style yield up opportunities like LPing the pools that we have. So third parties can collect fees and so on. And I think, the sort of retail DeFi user definitely demands yields. So as a provider, you sort of have to make sure that they're there, and just think through how it happens and try to do it in a risk minimized manner. We are also seeing a push towards vaults. Users want an experience where they put money in. They don't have to think too much about it, and more is there when they come back. So, in particular, for like Ethereum ecosystem people, they want that denominated in ETH itself. So if you combine LSTs, sometimes plus a bit of conservative leverage, you can get more ETH denominated yield than you would without doing that. And our system is sort of very good at producing yields that way. And also, it is quite common in DeFi, of course, to augment yields with points, or ahead of a future airdrop or that sort of thing. And that's something we do as well. And it's a funny thing. It's sort of it's what the users demand, right? Like if everyone else is doing it to compete for deposits, you sort of have to do things along these lines, et cetera. So lots and lots of different yield sources on Strato. And I'm sorry, Wizard of Vault, I've forgotten your first name. You can produce yield on non-yield bearing items this way as well. Basically, if you got Bitcoin, gold, Ether, et cetera, they're fairly good borrowing assets, particularly the precious metals. They're just typically not quite as volatile. And so you borrow at some rate, and you might have to deploy in a higher risk vehicle to get a higher rate. And if you capture that spread, you can just buy back more Bitcoin, more gold, more ETH as you go. And that's a good way to take an unproductive asset and make it productive, albeit, you're certainly taking on a risk if you do that. But some people just cannot let the, their assets sit. And I'm kind of one of them, so yes, yields available.
Yeah. It's kind of like you have like a choose your own adventure for how much like risk you want to take on, I suppose, a little bit.
Yeah, although we definitely try to hide. We've got sort of like the advanced section where it's like we're typically recommending a pretty conservative health factor in the UI, and you got to like go in there and turn it all the way up if you really want that. And most people don't. Most people just kind of follow what the UI suggests to them. But the experts will certainly go crank it up.
Right. I kind of like, it's almost like, for me, like I'm kind of the person where it's like, I'd rather just kind of buy an asset, hold it, and then maybe, treat kind of like a high yield savings or something like that. If I could, if I can get 4%, I'd be pretty happy with something like that. But obviously there's people that are kind of chasing like much bigger things. What, over at Metals, is that something that you guys, I know with uranium, you were able to borrow USDC against some of these assets. I mean, is that something that you guys are gonna be exploring like with yield and stuff too, or?
Yeah, for sure. Look, I think there's a spectrum of investors, right? That you got the gold bugs at one end that want to know the serial number on the bar that we can absolutely cater to with the spot capability, and then there's more of the DeFi native that wants to loop it, and we've seen some of that with uranium. I also think there's space in between for all those different stripes and perspectives, and I think the flexibility and composability you have when these assets are on chain enables you to deliver on that, right? Vaults is a great example. Most people, certainly coming from a TradFi world, probably aren't going to go and do the looping themselves. But actually, once you put that in a vault, and just actually what you're doing is depositing USDC or USDT or whatever stable into a vault, and you're getting that stable, capital appreciation asset plus the yield on that. It's a pretty phenomenal experience for them. And so I think we absolutely see that as part of the roadmap for what we're building on metals.io. We'll start, as I mentioned at the top of the call, with, offering other collateral capabilities and borrowing and lending markets. But we see vaults as a big part of it as well, both in terms of the spot asset and people not needing to want to research, the investment thesis behind cobalt, nickel, or some other rare earth metal, and wanting just to be exposed to a theme or basket of assets. I think we see that as a big opportunity as well. And of course, one thing we haven't talked about yet is things like perps, which open up a whole other dynamic, not just from a return perspective, but also from a risk management perspective as well.
Yeah. And tell me, like, if I'm someone that's new to this and I want to get involved, like, explain this concept of vaults to me. I think we're often kind of familiar with like liquidity pools, like you said, like, other things like perps and things like that. But like, what is actually going on behind the scenes when I put my money into a vault?
So typically the way they work, they are to a certain extent managed, right? So you deposit into a vault and you get another token back, which allows you to withdraw from that vault when you burn it. and then someone goes and deploys the capital within the vault. So like a little bit like an ETF, but kind of pure on chain. You sort of authorize an account to run a strategy, or some number of accounts to run a strategy. And so you would, for instance, like our ETH vault, typically you would deposit ETH, and the ETH would get converted to liquid staking ETH, like WST ETH or so on. So you don't have to think about that. Like you don't have to go over to the Lido site and then mint the liquid staking ETH. And if there's any looping, that would be done by the vault operator, say, as opposed to the user themselves. So it just provides a means to select a sort of strategy without like doing the nitty gritty of running it yourself, the rebalancing, et cetera, et cetera.
I think I couldn't agree more. I think it's a perfect explanation. I think the summary view was on another live stream I was watching over the weekend, because I'm that kind of person, right? But I think it was a CIO Bitwise described it as sort of the next logical evolution of ETFs and fund management, in terms of there is a curator or a professional manager that takes care of it, but you get more transparency and more control than you would. And that's the sort of general theme we're seeing in terms of this move on chain of all these assets.
Yeah. So it's essentially like I kind of give my money to someone who like that I trust, that will, manage it properly for me. And there's like a lot of transparency, in that system itself, as opposed to, when I do typical DeFi kind of things, I'm like all the responsibility kind of falls
with you. Yeah, exactly.
Okay, cool. I mean, it does sound like, for a TradFi person coming into the space, like that would be appealing to them, or even for me, like I'm not like one of the degens. I don't trade crypto. I actually just hold stable coins, like mostly. So, some things like this actually could be like very appropriate for someone like me.
I would say that you find, much like with day trading, most degens lose. And what you hear is after about 18 months, they wash out of the harder core trading strategies you see, and then so hopefully, right, the vault operators have just like a fairly fixed strategy and don't get emotional, right? And so you hear a lot of people like, oh yeah, okay, I'm just looking for yield, maybe a little more risk on than or risk off in different cases. But it's the thinking about it, the trading, the mechanics that often gets you in trouble as a user. So there's definitely, I think, a whole bunch of people who've been burned too, who hopefully they stay in crypto, right? And then, recognize that most people aren't great traders, right? Like, it's super high washout rate, and most complicated trading usually doesn't work. Like you should just do something simple and fairly conservative, most likely.
Yeah. I think, I have a lot of things to say though. I think first, like if you were to look at, the timeline, the X timeline, you think everybody is like a very successful day trader. But obviously, like we all know that is really not the case, right? Like most people lose money. You have like a few winners and then a lot of losers, essentially. And then I also like, it made me, what you said made me kind of think of, I was listening to a podcast a couple months ago, and they were talking about how like, essentially like this kind of simple strategy, right? Like Warren Buffett is like kind of the perfect example of just kind of like put your money in, like slowly, kind of like the simplest strategy really works. And he actually kind of made like a bet with like a lot of hedge fund managers, and it's like, look, I'll just like S&P 500 it and just like ride the wave, and he outperformed like a lot of these people who are like doing these very, very complex things with their money. And so sometimes like really the easiest solution, I think, is the best solution in my opinion. Jonathan, do you want to add anything on to this? I mean, what is like, as a person involved in crypto, or somebody who obviously invests, and maybe you trade as well, like what do you kind of think of these kind of vaults?
I think they're interesting. I think certainly we've seen a rise, particularly led by the perp dexes. I think that's been a really interesting narrative, and having those elements on chain. I think it opens up a lot of new opportunities. I think the transparency is quite interesting, and I think it's you can almost run a hedge fund on chain now. Looking at some of these perp decks, and but it's a lot more open than the traditional opaque system. But I also think crypto's it's at an interesting point. I mean, going back to the yield element, it's a really difficult environment now for DeFi to compete on yield when you've got T-bills that are paying 5%, because you're then having to compete against that. Ultimately, if you're a DeFi yield at 5% or you've got a T-bill at 5%, 99% of people will choose a T-bill simply because it's a safer investment. And so then you go into these high yield assets, and it comes down to the question of where's the yield coming from. Some of it is yield that they're actually producing, but the issue we've seen in crypto is a lot of these are a yield that is quite artificial. They're selling tokens to raise money to pay yield, and ultimately at some point the chickens come home to roost on that. And I think enough people have probably been burned by that it does leave a lasting remark. And I think ultimately that's going to be an issue that DeFi is going to have to grapple with, certainly until we see some subside in interest rates, which I'm personally of the persuasion that we don't see them come down particularly quickly, given the inflationary headwinds that we're likely to see from a macro perspective. And so it raises a question in terms of how then can you get the yield bearing assets that you currently have, how can you really make them more and more productive? And I think that's where AI comes in as a really interesting paradigm, and the vaults also as a question of, if you're able to outperform treasury bills with that, whilst also maintaining that element of safety and ultimately running a good Sharpe ratio, then I think that there's a lot of opportunity to certainly capture market share, because there is some gaps in that area, but it's a very difficult audience to get that level of trust in at the moment.
Yeah, absolutely. And so I think that, as we're kind of seeing things become more, I feel like we're kind of moving in this direction, like we've all been talking about, this moving in this direction of more like mainstream adoption. We're getting all these more TradFi people in. We're kind of recreating, almost, so to speak, like some of these TradFi structures within, DeFi as well. What are some signals that you all are looking for that would kind of tell you, like, okay, we're here, like we have like mainstream adoption is like really close, or we've kind of made it. Like, what are some of those signals for you? I'll pass it to Kieran if you want to. First.
So I think let's go to some more day-to-day use cases for a second. I like that we've got pretty good non-custodial crypto cards right now. So get the MetaMask card, the EtherFi card, the Gnosis card's been around for some time, more EU. There's some other ones too with quite large market share. So like if you're at a big dinner with crypto people, you often find that they settle with Venmo, which drives me crazy. Like, like guys, like, come on. So at least, so I think sometimes you're going to just see crypto as sort of back-end infrastructure, and the front end doesn't change, i.e. the card. So the way the card works for us, right? You can put it in, you can kind of borrow stables, or you can swap for stables. So you hold your portfolio of assets, and ultimately you have to deliver USDC somewhere to top up the card. But there are different ways of getting that, right? And so I think people will start to see it as sort of just more normal to keep crypto as like something like a kind of primary savings account, and you could spend from there without having a bank account tied in, but mostly keep your assets in a crypto native form. So that's kind of exciting future to me. But I think what we need to tackle are like what do we really still need banks for? like creation of money, not really. We can make our own. They're still kind of good at underwriting risk. Like the crypto does not have unsecured or under collateralized or lightly secured credit, and that is the engine that makes the economy go. Like if we can figure that out, you can get like in effect like a small business loan, pure crypto native, maybe faster, maybe at good terms. Even if the terms, if the interest is a little higher, like, but if it's easy and quick, I could then start to imagine, like people are not wedded to the bank by any means. They need the services the bank provides, and so we're going to see some future in which consumers have a breadth of options coming from the crypto native side, coming from the TradFi side, and they may not even really notice or care the source. And we want it to be as much from the crypto side as possible, but we should also acknowledge that a lot of the good assets are from within TradFi, blue chip stocks, right? Or even also like, I had the very funny experience with the run up in, like Anthropic, OpenAI, the crazy valuations. People, like a whole bunch of people asked me how to buy Anthropic stock. I'm like, I don't know. Like, and some others, and then some friends of mine were connected with sellers, and people are charging like a 15% carry just to like let you get in on the Anthropic secondary, which just shows something is wrong there. But that shows that demand is so big, right? And so people are actually, I believe maybe it was Robinhood who did some tokenized versions of private that came from their portfolio. So we're going to see this merger too, but like, let the good TradFi assets in, and let's try to make it as crypto native as possible, like light on the transfer restrictions, et cetera, and think about what's best for the consumer, right? That's how we'll know that, like, you start to see, the TradFi rake start to erode from competition in a way that like Uber did, sort of. But I think the TradFi capabilities will make it on chain, and they want that to happen, So in the end, we'll know when people's financial lives are better, more flexible, and so on.
Yeah, absolutely. Ben, you wanna add on to that?
Yeah, sure. Look, I think there's a few different signals that when we talk about mainstream adoption that I think would probably signal that we're there, or at least getting there, right? I think when you start seeing producers using tokenization directly as a distribution channel, so rather than people having to approach them to buy spot, but they're just saying we've got this is how we're going to sell our uranium, lithium, whatever we've mined out the ground. We're going to put it straight on chain, and then start to move up the value chain, I think becomes quite interesting in terms of offtake. That's a pretty clear signal that we're reaching mainstream. When, look, there are arguments, which is probably a whole other live stream, on what's going on with the junior miners and how can tokenization solve that problem. But we could get into that, and that would be an hour, 2 hours of conversation, I'm sure. But I think when you start to see more of that as not a sort of proof of concept or pilot, but that's the mechanism in which these offtakes are starting to be structured directly into the physical, I think that's a big signal. I think starting to see that bridge between TradFi and tokenized commodities, so ETF wrappers around tokenized commodities, I think that's a pretty clear signal this is going mainstream. So that removes a decision point for a lot of big institutional allocators and individual investors, right? You can buy it on your Bloomberg terminal, you can buy it on through your brokerage account, but it just actually for the fund itself, it's much easier exposure in terms of buy it rather than having to open an account with a storage capability and all the rest of it. That's when I think we'll start to sort of hit the real mainstream. The custody side of things from institutional custodians not asking all these questions about what an asset is and just supporting tokenized commodities as standard. I think that's broadly true of not just tokenized commodities, but crypto more generally. I think when we start to see the big custodians just accepting it regardless, I think we know we've hit the mainstream then. And then the final piece, obviously, which is if we do all of that and we see all of that, and it should come anyway, but that sort of secondary market liquidity reaching critical mass, that people don't look at it as, well, what's the tokenized liquidity versus what's the physical liquidity. They just look at liquidity including tokenized liquidity, and those markets become on-chain, become self-sustaining, and spreads tighten. I think that really is it's a bit glib, but that's obviously the truest marker of us hitting the mainstream in terms of adoption, is that there's more people participating.
Yeah, absolutely. And I think that we're not going to see TradFi obviously disappear, because that's not going to happen. But it's almost going to become this. They're going to be almost seamlessly connected. A lot of things that I've heard a lot of people say is the user doesn't want to see the stuff that's going on under the hood. They just want to drive the car. You know what I mean? And kind of what you were saying, Kieran, I've been at conferences and I'm I wanted to pay people, and it's can I send you crypto? And they're and it's that's kind of where I think I see a lot of the consumer kind of applications coming in. I use a consumer crypto card. I only use crypto in my daily life. I think I don't really see the need for a bank anymore, kinds of things. So I think that we're starting to see this happen. It's happening more and more quickly. Jonathan, what does it look like for you when or what would make you say hey, we made it,
I think just like Ben's point, I think more global acceptance, but also it's how easily it can tap into the liquidity, because ultimately whilst when you're in crypto everything feels big, but if you zoom out and look at TradFi and the economy as a whole, we're still absolutely minuscule. And we look at it in terms of the liquidity that you're able to tap into. The entire crypto market cap is $2.5 trillion, which is less than the GDP of some countries. It's still very, very small relative when we look at the global markets. I mean, government debt is trillions, hundreds of trillions, and we're still very, very small into that. And I think ultimately, if crypto and ultimately tokenized assets are able to sit in a framework which is able to attract some institutional liquidity more frictionlessly, then I think it opens up a wave of accessibility, particularly when you have elements of being able to trade 24/7, freedom of being able to see what's moving where, and ultimately making everything a lot easier, not only for the individual to get exposure, but for institutions and high net worth individuals and hedge funds, whoever wants to get exposure, they're able to move more quickly. And ultimately it's the merging of liquidity pools, because currently you do see crypto and traditional assets, because there's such a bridge to get on and off, it is a natural barrier for liquidity to flow. And I think certainly the more that's able to be broken down by various derivatives and various mechanisms, even financial institutions who operate in the traditional sphere, having those crypto rails and being able to move stuff on and off chain very quickly, I think ultimately will help bridge that liquidity. And with liquidity comes more inflows, because it's easier to get money in and out of it.
Yeah. It's reducing friction. I think that's huge. I mean, I was actually, that you say that, I was thinking today, I removed some of my, I got some rewards with one of my crypto cards, and I had to send them to the Move network, and then I had to swap it to USDC, and then I had to bridge it over to Ethereum, and then it's gonna take 24 hours for literally for $50 to get into my account. My mom has the same kind of consumer crypto card, and she had rewards too, and I was like, Mom, I'll just send you the money and you can give me the crypto. And so I think we're we got to get to this point of reducing the friction. And one thing too that you had mentioned is the market cap of crypto is so small relative to the the global economy, and also too our user base is so small, right? I mean, you think about an application like Facebook, how many billions of people are using Facebook or Instagram or any of these other platforms. I mean, I don't know, like if you were to guess, like how many total users do we have like in Web3, right? I mean, it certainly doesn't come close to that. So I think like it's like we are like moving in this really strong direction, and like TradFi, like the institutions are getting involved, but like down at the public level, we still have a lot of work to do. And we're getting there, right? Like kind of like what you said, Ben. Like once some of these institutions, like they don't really kind of think twice about some of these assets. Like I hate to say it, it's like there's still a lot of people that think this is all scam, right? Like a lot of people. And so like we're still like we're obviously working on that. Like we're getting regulatory clarity in a lot of countries, like in the U.S. and in things like in the EU. But I think we still have obviously a long ways to go. So looking kind of, we're getting towards the end of the hour. Why don't you guys give us a little bit about like what can we look forward to with your respective projects? So like Ben, why don't you tell us a little bit about like what does the rest of the year look like for Metals?
Busy is the short so we've got other metals coming on board in the first half of this year that we've got line of sight of. I expect we'll be at least 10 different metals by the end of the year, which is really exciting. I think also that roadmap is super important from a kind of wider benefit of being on chain, right? A lot of the stuff that Kieran and team are doing around the collateralization and the borrowing, we'll be having that functionality in metals.io, but also the perps, the vaults, I think also are crucial in showing that this is just a better way to transact, right? It's just a better way to invest. It's not anything scammy. I appreciate the sentiment there, but that's sort of what we're looking to try and build out. Is this is just a better way, and leapfrogging all of those traditional markets. A lot of the markets we're looking at are markets that are still haven't changed in 150 years. Or at least certainly in some of the more modern versions of those markets, not since the 80s. So, making that more accessible and doing that, being able to do that in one place is the ultimate vision. Then the other exciting piece is, how do we back into that TradFi world as well? So some exciting developments there, hopefully later in the year.
Yeah. I think if we're going to kind of convince the public that this is legitimate, I think the RWAs are really the like the category essentially that's going to happen, because that's what people are really kind of most used to. Kieran, what does the rest of the year look like for Strado?
Yeah. Good question. The rest of the year is a long time. I don't know. I feel like cycles are really fast these days with AI too. It's the world will be entirely different by the end of the year. But so we'll have more asset coverage. So as a for instance, we've made certain tokenized stocks eligible as borrowing collateral. So pretty much if something works well with DeFi, it has enough, liquidity out there and market cap, we're interested in it being on our system and allowing users to get purchasing power against it. So we'll cover anything that there's enough demand for, and we're starting with kind of the highest quality, largest market cap. So like gold, silver, Bitcoin, ETH, so sort of where we've started, and then moving a little bit more long tail from there. So there'll be lots for your DeFi natives who are rotating to or have these sort of holdings, but also more work on making it really easy for the mainstream. So one thing we didn't discuss is just this sort of pain of dealing with on and off ramps from crypto. So if you got a regular person and they want to pay with their bank account, a credit card, and so on, failure rates are still really high. KYC is a pain. I've got one of these IDs that like somehow it always says it's blurry. I'm like, I'm doing it with the phone, and we're integrating a bunch of those sort of features to reach a broader audience, and trying to make it as smooth as possible, working with those providers to make it like reusable KYC and so on. So I would say the universe of assets and the amount on chain will go up for us, but also the ease of getting into it.
Yeah. Cool. I mean, it sounds like a natural progression, bringing on asset classes that make sense and then reducing kind of friction for the user. Jonathan, I guess you're not, you don't have an RWA project, but what do you kind of want to close out with?
So I think we'll continue at Crypto Saving Expert to really help people navigate what is quite a turbulent environment. Coming from an economics background, it's an incredible time. We're seeing things that were pure theory play out, and ultimately it is unprecedented, the times we're in, and certainly a difficult road to navigate. And that'll be our focus going forward, is really helping to stay at the forefront of that, and ultimately provide the best service we can to our members.
Awesome. Cool. Well, hey guys, thanks so much for your time today. I really appreciate the conversation, and we will catch you all in the next one.
Brilliant. Thanks, Eli.
Thanks.
Bye.
Hey, what's up?
But it's not something Gen Z is afraid of.
If you want to survive, you got to build a house.
How many know we do not understand that we do not have?
Ladies and gentlemen.
Rebecca's Gen Z Media House.
Awesome. Thanks so much for joining us today.